is the best ICT top to down strategy you're going to ever find on YouTube. So I'm going to explain the strategy, and then we're going to go in. I'm going to show you my checklist, and I'm going to give you 4 examples on how to trade this strategy, all the boxes you have to check, and to make sure you don't miss any step. Now stick with this strategy. So I have gotten multiple payouts with this strategy, and almost everybody I've taught have gotten exceeding results from just passing funded challenges and also getting payouts. So let's get right into it. So let's see how our checklist is. Let's go and reset our checklist. This is how to use the trading checklist. So the first thing we have here is daily range. The next thing is draw on liquidity. Inside draw liquidity, you have these sections. The next thing we have is POI. The next thing we have is entry. So now let me explain each of these parameters. So daily range is the first here, because before you find draw on liquidity on weekly, daily, and 4 hours, you must identify if there is a dealing range. Now, a time frame that does not have a dealing range is excluded from the time frame that we are going to use to look for a draw on liquidity. As simple as that. So draw on liquidity, the next segment. So this is going to be ticked if the weekly can tell us a draw. If the weekly time frame can show us, okay, this is the next draw, price is going to go up or price is going to go down. But remember, we must identify the daily range on our weekly time frame first. Now, if that has been shown, fine, we tick it. We come to the daily. If daily has dealing range and can tell us to draw on liquidity, we click it. If the 4 hours has a dealing range and can tell us to draw on liquidity, we click it. Now, note this. Even if you see that there are 3 here, the 3 mustn't be ticked. We only have to tick at least one from either of these 3. At least one. Either weekly, daily, and 4 hours, or only daily and 4 hours, or weekly and 4 hours, or daily and 4 hours, or only 4 hours. But it should not be left empty, but at least one should be ticked from this session. Moving on, this one has to be ticked. POI. On the 1 hour, find a clean POI above or below midnight for London. So, if on a bullish day, we are looking for POI below midnight. On a bearish day, above midnight. Okay? And below and above 8:30 Eastern Time for New York, if execution comes after 8:30 Eastern Time. Now, this will be re-explained in the video when I get to this level. Now, what about the entry model? On the 15 minutes, 1 hour POI has to be refined to 15 minutes POI. So whatever POI we are choosing here, on the 15 minutes, it has to be refined so that it can, inside that zone marked for the 1 hour POI, another zone inside that zone that is from the 15 minutes should be shown. That's how we know the 1 hour POI is strong enough to push price to our desired direction. 5 minutes, say wait for market structure shift, execute on the candle that caused the market structure shifts. That's your normal MSS, market structure shift on the 5 minutes inside that same zone that is being refined on the 15 minutes. So let's get right into it. Let me show you an example now. Just see how the next example is going to go. So let's go straight into it. So now this is gold. On the weekly time frame, we don't have any weekly high yet, because my criteria for choosing weekly high is that there must be a chop on a daily structure. Price must change character to bearish before we can achieve here as weekly. Remember, I marked my weekly with black line, but that has not happened yet, so we don't have any weekly high. So therefore, the weekly does not have dealing range for me. That's how I trade. The weekly does not have dealing range for me. So on the daily time frame, what's the next thing? Do I still have dealing range right here? No, because this is the last daily low, and ever since we have made that daily low, we have not actually made, let's move all of this. We have not actually made any serious okay, maybe we must have, but let me just pick. This is good, kind of old data, right? Okay, yeah, I think here we must have had a red high here, and then this is low that led to it. So let's go back to the daily. So the last daily high and low we had was this and this. Remember, the criteria to have a daily high is that there must be a 4 hour chalk right there at when price takes us a recent ERL on daily or previous daily high, anyhow you want to call it. There must be something like this before we can guarantee that a retracement will happen, and this is not a new daily high. But that has not happened after then. So what happened? All of this now is not a daily high. So I don't have daily dealing range, I don't have weekly dealing range, I don't have daily dealing range. So let's see 4 hours if we have any sort of daily range on the 4 hours. So on 4 hours, things are going on, like literally. Even if we look deeply into this whole thing, I think we still have another daily high here, and we still have another daily low, but we still don't have a current daily range. No matter how we call it, we still don't have. So let's look inwardly into the 4 hours, what the 4 hours has to offer us. As you can see, the market's different highs and lows and everything. So this is our previous 4 hour high. I like making it green so I can stand out from others. This is a low that led to the break of this. We can't call this, okay, no, we can't, but we'll verify on the 15 minutes if we can call this a 4 hour high yet. 4 hour established high. We'll verify on the 15, because on the 15 we need that chalk. See the movement from weekly to daily, from daily to 4 hours, from 4 hours we jump to 15. That's how we like try to verify highs and lows on this time frame. On 15 we want to see the same chalk right there around the high for us to confirm. So let's go straight to the 15. So on the 15, do we have such? Yes, we do have such. You can see the market going up, low, high, low, higher, high. Okay, so we did higher, high, then you see all of a sudden price moved and broke this. This is the chop we are looking for, literally. So it means in as much as we have broken it, then what do we look for next? So we have actually had an established 4 hour high. So now when you have stuffs like this, you're expecting the 4 hours to retrace to a PDR rate to continue higher. Now if the PDR rate that is available is far, then your draw for 4 hours is going to be sell. And in this case, we'll listen to the 4 hours, because daily and weekly did not give us any daily range for us to find draw liquidity in. So what the 4 hours tell us is just what we're going to follow. But now in this case, there is PDR rates are kind of far. The market is kind of bullish, but in this case we have just this SSL. Okay, now this SSL is where price literally just ran. So it means before price ran this, your bias was bearish, maybe that was London or so, but now price has literally ran it. So what does that mean? So it means as price ran it, we want to go and confirm on other lower time frames if that running is worth it, if it's something that is showing on other time frames. Let's see. So we'll start from the 1 hour first. If that SSL run is meaningful on the 1 hour, if it's meaningful on the 1 hour, go to the 15. If it's meaningful on the 15, go to the 5 minutes. When everything aligns, then we know the draw is what's confirmed to be this higher, right? So on the 1 hour, it actually ran with the 9 sweep. So that's a nice one. So on the 15, it actually was what week. Also price swept. That's complete what do you call it, stop on. So it's allowed. It shows that okay, this liquidity grab is very, very nice, like it's very, very powerful. On the 5 minutes it closed below, but price literally got into an old order block sitting here, so it makes everything still hyper valid. So what do we do next? It has been confirmed that our draw is higher. So now what's the next step? Let's go to our checklist again. So we had no dealing range here except 4 hours, and if there's no dealing range for weekly, then there's no draw to find. There's no draw to find on daily, but there was draw to find here higher. Then POI time, let's see if we can get that. So time to find the right POI, we use 1 hour. Now we're on the 1 hour chart. Let's find our midnight time. 5 a.m. Nigerian time is equivalent to 00 midnight Eastern time. So that's exactly what I'm doing. It's Eastern time that the strategy was coded on according to ICT. So you use Eastern time to get it right. So I'm using Nigerian time here, West African time. So as you can see, we actually did this thing on 1 hour time frame early enough. So we are not expecting price to go to another 1 hour POI again. Okay, you just expect price to run here again or do anything again. So it means the only thing you need to verify now is 15 minutes. Okay, so on the 15 minutes right here that you want to choose that POI, you want to like choose something. Now this is a rejection block I want to work with. Now I'll be like, how is this a rejection block now? The only POIs that need a breakout structure to function is an order block, right? Now other POIs like FVG does not need a breaker structure. It's not a must. Rejection blocks do not need. Sell side and buy side do not need. Okay, so it's only other blocks that need. So you can actually choose a rejection block as visible as this. The only criteria that makes you choose them is, one, I hope there is no candle in front of it, like there's no candle with wick in front of it. Two, if you refine it to a smaller time frame, it should be showing you an order block or most likely an FVG. Get that's what's going to strong your mind that okay, this rejection block is not just a candlestick wick, it's not just a scam. So if you go to 5 minutes right now, let's see what that box actually is on the 5 minutes. That would confirm to us if it's something we can work with or not. So on the 5 minutes, it's actually nothing too serious. So let's go to the 3 minutes and see. So on the 3 minutes, here is actually kind of serious. If you refine it to this FG here, you see that okay, there's something kind of serious here. So if price returns to this and gives me a new 3 minutes market structure shift, I would take it seriously. Now we just return to this. That's good. So all I want to see is a market structure shift on 3 minutes. Then I'm gonna go long. Okay. Now I have just seen what I'm looking for. You see a market structure shift on 3 minutes and stuff. So where am I going to put my stops? Well, I'm supposed to put my stops at this mitigation point, but I'll just give it some breathing space and put it right here. Feel me? Just so that I make sure I'm safe. Give it some breathing space. Put it right there to make sure I'm safe. Now, where is my target going to be? Now, I told you guys that when you're placing targets, always make sure you're looking at where you're taking your profits from the 1 hour time frame. You have your draw on 4 hours on the rest, but don't just have these high expectations because you're just trading for a single session and you don't want to spend so much time on that trade. So this is giving me 1.6 hour. Let's see what we can adjust right here. So if we adjusted our entry while everything was forming, okay, I do that a lot, whereby I see that from where I am plus my stop loss plus my target, if I know that okay, it's not up to 2R, I'm gonna try to shift my entry before entering that trade to make sure it matches with 2R, so that I know I make maximum profits on the trade. You feel me? So let's see if this would work out. Let's see if this would work out. Okay, it actually worked out and gave us our 2R. Okay, you see it's very, very precise and make a lot of sense. You see that, right? Nice. So let's go on to the next example. Let's see this very clear example I'm going to give you on the 20th of September. Now this Euro USD trade, I'm going to make it as clear as possible. So now this is my weekly time frame. So now we're going to mark the weekly structure, which is the visible highs and lows we can see on the weekly time frame. So first things first, the external part of this time frame is the internal part of the monthly time frame. So I'll just make sure it's as clear as possible. So we have the black lines here that show the weekly. Our black lines here actually makes me remember that this is a weekly time frame. So all the weekly time frame lines, I make it black. Okay, so this is it, right? So as you can see, we just took out this high and we are here right now. So this is the most recent high we have on the weekly time frame, and now it's this way because here you can see here has a chalk on the lower time frame, which is the daily in this case. So the daily is the next time frame after weekly. Around here there is something like this, and you know what I mean by that. There is something like this on the daily around here. So that is why here is regarded as a weekly high. I like calling it weekly established high. Just makes you understand that okay, that's qualified to be called a weekly high. So where is our dealing range? So this is our dealing range. So I'm going to use a rectangle to highlight these whole area. This is our dealing range. Between this low to this high, this is a low that led to this high. That's our dealing range. So inside that dealing range, we want to check what is price doing in that dealing range. As you can see, price retested this order block right here. We see my definition of order block is the smallest candle before a significant push to the upside. This small doji before this move makes a lot of sense for me to call it an order block. So this mitigation of it, now I will not still be sure if, first of all, on the checklist I've been able to identify my dealing range. So let's go there and mark it. Right, weekly we have identified the dealing range, but now I want to identify the draw on liquidity, right, on that. So let's move forward so that you get it step by step. So now I see price reacting from here, so I can't tell if we are gonna go up. Okay, if the draw for weekly time frame is gonna be up. I know each of these candle is every single week, I know, but for me to predict, remember what I'm trying to show you guys is what happened on September 20, and on that September 20, I think it fell in this same week, this candle that is here. So it means before that trade, that particular day, this candle has not formed this way. Okay, so I need to determine the overall draw in the weekly time frame so I can know how each candle will be forming, where they'll be gravitating to. As they keep forming, what will they be gravitating to? I need to identify it. That's the draw for the weekly I'm talking about. So price reacting here, for you to know if price will respect this to go up, or because if here is not strong enough, my draw is not supposed to be, or my draw is supposed to be lower, maybe price will try to chase another PDRA, more like this rejection block or the sell side liquidity or something. But then if here is qualified, if it's valid enough, then it's going to be capable to push price higher. Okay, so how do we verify? We go on lower time frames to check that zone on lower time frame if there are other PDRAs existing in that zone. That's the cheat code. That's how I do it, right? If there are other PDRAs existing in that zone. So now we can see that zone right here. We see that there is an order block inside that zone. Let's look at it again. So there's an order block inside that zone that price is reacting on daily. So now inside this daily zone that is drawn, let's go to other time frames and see if there is another thing there price is reacting to. So it's going to make us know what we are looking at. As you can see on the 4 hours, that same area, there's an FVG there that price tapped into. Now this is making this bigger place more valid the lower we go. So go to 15 minutes now to go and peep that same mitigation point. What POI did price react to right there? So let's see. This is where it got mitigated. So let's see. So we're paying attention to this 4-hour box now. Remember how I'm moving from weekly to daily to 4 hours. I jump 1 hour 30 minutes, then I'm in 15. So inside this same box we have this other block right here. We have fair value gap, any of these things. So I'm going to use lines to like mark them so that I can easily see where these things are, right? So I'll just put these lines there at the beginning of these places to see where price actually is sitting at the beginning of all the PDRAs. Let's see if we extend it where price is actually touching. Okay, as you can see, it's reacting to the order block. That's what I can see right now. This is between these two lines, we have the order block. You can go back and verify. So let's see. You see, between the two lines, you have the order block. So I'll just remove this one so I don't get confused. So it means on the weekly, that zone is powerful enough to push price up because many time frames now are backing it up. So therefore, here is the draw. So it means the weekly candle that we have seen already play out now, before it played out this way with this previous week candle mitigating here, I knew it was going to be bullish. So we have found our draw for weekly time frame. Let's go and mark it on our checklist. Right, nice. So we'll go to what? The daily time frame next. So the daily time frame, let's go. For the daily time frame, how do we know our draw? So first of all, between that weekly dealing range, between this low and this high, you have to mark your daily structures. Okay, mark them and make sure they are as clear as possible. So if I'm marking my daily structures, I like using my red lines So I don't want to go too back in time. I'll just mark what I'm saying recently. But all these highs and lows that are visible on the daily time frame are your daily structures. So we have them here. We have this. This was supposed to be an old daily high, but because it led to a chalk right here, it graduated to be black. I explained that, right? So now all of these are my daily structures, and these are my daily structures. So now, in a matter that's my daily structure, where are we right now on the daily? We are right here on the daily. We don't have a current daily high. We have a daily low that broke this previous high. We don't have a current high. So it means the daily time frame does not have much information to tell us about draw on liquidity, but we know that because we don't have a specific dealing range, price just broke out this previous dealing range, so we have not had a new daily high to say, okay, this is our new dealing range. We don't have it, so it means the weekly is telling us bullish, the daily is kind of neutral. So let's see the 4 hours. If the 4 hours supports, then we are good to go. So on the 4 hours, between this current place and here, we'll look at our structures and know what is actually what price is actually doing. So every highs and low we'll see there, we want to take note of them. So as you can see, we have these. You can see we have this. We also had this. We also had this. We also had this. Okay. So I made a mistake before. In as much as we had this high, we pulled back there, we created this high, and then from here we broke previous low. Then here is qualified to be red. So my bad. If you peep the daily time frame right now, you find out that it has a dealing range. Okay, and it has a dealing range between this low and this high. It's clear. So now that dealing range, how do we actually evaluate the draw on that dealing range? So the draw now is a price actually created this high, came back here, reacted to this FVG, and this FVG, if you check it, is going to be what visible across other time frames. So it's powerful enough to send price higher. So it means price is chasing this high and then this weekly high. So daily just supported bulls, then weekly supported bulls. Now let's look at 4 hours just again. So after 4 hours break previous low, what has 4 hours just done? 4 hours has pushed higher right here. Okay, has pushed higher right here. Now, if price flips bearish in any way and there is no POI for price to drop down, what happens is that price will run to this high or to the previous high. That's what price will do, because there is literally nowhere price wants to anchor to continue lower. Okay, so that day was a 20th September. So I'm taking it back to 20th September. So let's see. So on all these days, we have a bullish bias. We have bullish bias on weekly, daily, and even 4 hours, because after breaking, let's look at it from the 4 hour perspective again. After breaking this low, flipping bearish, there is no POI price returning to, so it means this is the next place price is going to. So what happens is, now we have seen all our direction for all these time frames, that they all match one bullish. So now in the next POI, find a clean POI below midnight for London on the 1 hour time frame. So all of this is if price has don't have to go below midnight again. Don't worry, as we keep doing examples, I'll show you scenarios that we need to ignore that fact. So so now on the 1 hour time frame, let's see how we choose our POI. So first of all, you want to be in the right session. Okay, this is still showing 19th. Let's play till it's 20. So 12 o'clock. This is now the midnight. My midnight, since I'm using Nigerian time here on my trading view, midnight is 00 Eastern time, okay, and that is 5 a.m. Nigerian time. So I'm using Nigerian time here, so at 5 a.m. I'll just mark my midnight right there. So this is 11 o'clock. Now this is 12. Now this is exactly my trading time. So coming to the chart, this is midnight. So any POI below midnight is what's going to work. So we have FVG here. Now as you can see, price has already mitigated this before my Q zone. So what does that teach you? Now that teaches you that as price has already mitigated before your Q zone, you don't need to stress. All you just have to do is verify that mitigation if it's showing across other time frames. I like making my liquidity pools with blue lines. So you want to check other time frames if that mitigation is actually something valuable on the 15 and on the 5 minutes, since they are the ones lower than 1 hour. So on the 15, it's a sweep sell side, it did not close below. That's perfect. On the 5 minute, let's see what that means. On the 5 minutes, it closed below, but it actually came to run other liquidity pools here, which is perfect. Okay, which is perfect. So it means all these time frames are in support with that mitigation. So now we need a fresh mitigation since 12 started, right? This is where 12 started, this candle right here. So we need another mitigation on the 15 and on the 5. It has to be calculated, it has to be confirmed on the 5, but then from 15 we don't need new POIs on the 1 hour to be mitigated. This is just a rule. So if you go to the 5 minutes, remember we are under midnight generally, go to the 5 minutes, that's also a sweep. So what you want to do is now on the 3 minutes you want to get your market structure shift. So on the 3 minutes after that, your market structure shift is next, and price return to whatever PDRA. For me, I don't really care for price to return. After it does this, I take my trade. But then let's just see, keep my stop loss below. Okay, now I'm just gonna measure from where I am to the actual DL. Where do you choose your DL? We also our deals on these higher time frames, but then since you're trading intraday, just trading sessions, you want to exit at a 1 hour place, a place that is very visible on the 1 hour. So now this is exactly where we're gonna take our profits. But now this is Friday, and I have a rule on Friday. On Friday, I don't hold my trades more than 2 hours because the market always doesn't have that much volatility. So I hold it 2 hour amounts, and if price gets close to my TP, I close my risk. That's just how I do it. So one shot, we hit that profit target. See it? No, this October 3rd, I want to explain in this video, right? So in October 3rd, this was the candlestick for that whole week, which is this week I'm making this video, right? Today is Saturday, October 5th. So I'm talking about October 3rd on Thursday this week, and on Friday this week. I want to explain my two trades, and you can see how I work with the checklist to get it done. Okay, so this was how the whole week played out. But now let's imagine the whole week without that candle, right? So I can know the next draw for that week, how the whole candle had to form. So we have been able to create a new weekly high, right? After breaking this, we have gotten something like this. Now we can now call this black line, this red line, black, because it's only a low that broke a weekly high can be called a weekly low. But is this a weekly high yet? No. So throughout this whole week, like prior to the week, we don't have a dealing range. But trust me, what happened is when the week started, price started dropping aggressively. This is Friday of the previous week. So from Monday, Tuesday, we had this big drop. From on Tuesday, then we knew that on the daily time frame we have broken structure, we have caused what we call a change of character. So that means here has to graduate to black. Okay, it has to graduate to black. Feel me? So in as much as that has happened, here is now black. So where is our next drop? So if you go to the weekly, that's why you see this big ass candle, but then it was not this long. It was not here. It should be at just around here, as I thought, as a Tuesday. So how I just feel that my draw is going to be down because these are new dealing range. We are dealing with this whole dealing range right here. That's what we are dealing with. So we just broke with a week. So what kind of PDRAs are we expecting price to retrace to before going up? None. There is no other block here, no LVG, no sell side in between this range, between this low and this high, nothing. So that's why I knew that okay, price was going to run to the next ERL of the range. Okay, price is going to run to the next. So while we're here, I know okay, fine, the whole weekly candle will what break through. So we now have our weekly draw and our weekly dealing range. So we have to mark all of that: weekly, daily range, weekly draw, identify. Okay, let's leave this blank for now. So let's continue, right? So now continuing this on the daily, how do we know? On the daily, we just broke previous low. We don't have a new daily low. We don't have a new daily low yet. Okay, so this means we don't have any active daily range right now on the daily time frame. We don't have any. So I'm ignoring what daily has to say, but weekly is strongly telling me that we are dropping towards this, and that makes more sense than ever. So daily did not tell me anything, but I know that we are dropping towards that low. So what about 4 hours? What is it telling me? What in the world is 4 hours telling me? So you see this cannot be taken seriously. I'll just make it blue instead of normal green like this for my 4 hour levels. Why am I making this blue? Because this is not also a 4 hour low. Why? For a 4 hour low to be confirmed, price has to do this, which is a complete change of what character on the 15. No, sorry, not 4 hour. The 15 minutes has to do this, right? That's like, okay, if this happens around the low, then we know that okay, that has given us our confirmed for our top. But now I don't think we haven't focused on the particular day. Remember, we're talking about 3rd of October. So let's play it forward. Now this is 3rd of October, so let's take it a bit back. So let's see. So coming to 3rd of October, we still don't have any serious low. Okay, any serious low that the market has done. So it means we don't have a dealing range for 4 hours. Like literally, we don't have a 4 hour dealing range. Neither do we have anything serious. Now, when we don't have that 4 hour low, what does it entail? Coupled with the fact that weekly is telling us that price is going down, it means our bias for 4 hours is lower. Even if you don't have a 4 hour dealing range, it has told us that okay, our bias is lower and price is not willing to retrace to IRL on this 4 hour time from any of these PDRs. Price is not interested. Price wants to drop further towards here. That's meaning that's why we don't have a 4 hour low, right? So back to our watch list. It means this, we're not marking this, but we're marking this. Like I said, one at least out of the boots categories, okay, and having it from drawn liquidity is very important, even more than this. So we have had all this, so this is next thing right there. So POI is the next thing. What POI are we going to use? That's going to drive us towards our destined direction, which is all these levels. So go on the 1 hour time frame. So on the 1 hour time frame, your trading time, let's play it is our trading time, which is in the afternoon, 12 p.m. Nigerian time. So by 12 p.m., we start acting like we are creating a kind of serious low right here. But I bet it's not serious. Let's pick 15 and see how unserious it is. So look at, we are on the 15, right? This is the last 15 minutes high that led to this low. And that's like where we keep our danger red line. That okay, if price crosses here, we know that okay, price wants to retrace into the range IRL, okay, on the 4 hour time frame. But then if it doesn't cross there, then we are dropping hard with the weekly time frame direction. So you mark that sheet there so that we know. So now looking at the 1 hour, what should we just look for first? Where is our midnight? 5 fucking AM, and we're gonna make it ticker. So we are above it, which is a good thing. Like it's a very good sign. We are above it, and as you can see, by let's play till it's our trading time. Trading time is what 12. As you can see, price has mitigated this other block since morning. Okay, coming to this 12 now. What's the routine? If we don't need to look for another 1 hour POI price to chase, if they have done it before in London, then that's okay. For you to know that's okay, you need to go and confirm that POI on other time frames if it did something reasonable in other time frames. As you can see, it entered this other block on 15. So it means that whole mitigation is valid. On 5 minutes, what did you do? On 5 minutes, it actually, we can see a sweep of liquidity right here on the 5 minutes. So it means 5 minutes, 15 minutes supported this mitigation. So now it's now 12. We just need a fresh mitigation, but we don't need that fresh one on 1 hour, but it won't happen. We just need it on the 15 minute time frame, as long as we continue to stay above the midnight. So when that happened, that was everything I wanted, right? So when that happened, boom, as you can see, price ran this, but then after running this, price did not give us what we want. So we checked the 3 minutes, price did not give us market structure shift, so we continue to wait, right? Even at this point, price did not give us market structure shift, so we continue to wait for the right market structure shift to happen. So when this happened, so now there was a news coming by this 1:30, and when the news is coming, it's wrong that okay, you have had a market structure shift, so it's time to start trading. No, especially when you've had signs like this that okay, price has gone now to go and break above this, so something is wrong. So in such case, you don't enter, you wait till the news. So before the news, all you have to do is keep your entry position right here. This is the last low created, and you want to keep your profit and your stop loss right there. That's what you want to do. I want to put your TP to 2R because it's news. Okay, and what you want to do is, I personally will wait for another sweep because price going on the 5 minute, price going above this and closing above has invalidated this sweep. It's now useless until another sweep happens before I can trust it. So I won't take any trade. I'll wait till it happens. Now that's where it happens right there. So while it happens with this racing, as price is racing, is going to tag me in on my what sell stop. So I'm not going to set no sell stop or enter any trade until I've seen the final sweep that is visible on 15.5 3 minutes, and then that's exactly when I want to get into my sell trade. That's it. Kept dancing, and then it still had to hit TP. Okay, so you see what just happened. That's a very clean example. And then on the 4th, we had NFP. Remember, that's the next day. This Thursday price action. So we still maintain the same bias. Why are we maintaining the same bias? On the weekly time frame, we have not hit that plan. That thing we plan to hit on the weekly time frame has not been hit as at Friday. This is what we've been planning to hit on the weekly. It was not hit as at then. This is my blue line, right? This candle, this big ass candle was still here. So it means our draw is still reserved. So we still have the same idea for the Friday NFP, and we still have the same idea for all this time frame. So in as much as we have not still had any established low on the 4 hours, we just keep working with entry models to catch sales. That's just it, period. Very simple. So we'll play it to the next session. Sorry, this is the NFP happening. I was too fast, but then let's leave it from here. Okay, so next session. First of all, this low on the 4 hour is not an established low yet. It did not cause any chop on 15. So that is that. So we should find our midnight for this day. So our midnight is going to be somewhere around here, and boom, that would be so nice. You see there, somewhere around there. So we are already above midnight right now. So what POI do we choose and everything? So I can see that there is a liquidity resting higher here. I can see that there is another one right here resting. So until price goes above them. Now, why am I waiting for price to go above 1 hour POIs in this case? Because during London, nothing serious was mitigated already. I only do those things with 15 minutes time frame and avoid doing it again on 1 hour time frame. I only do that when on 15 minutes, when on the 1 hour, it did not mitigate anything during London. Okay, that's when if it doesn't mitigate anything during London, then definitely you need a new mitigation during your session, New York, Q-zone, right? So now this just happened. Remember, I'm waiting for 1:30 to trade NFP, and boom, that's the NFP move. But then how did I catch it? Now let's see. We just ran this sell side right here. As you can see, we ran it right here, the buy side liquidity. So on the 1 hour, so that was confirmed, and on 15 it was also a sweep confirmed that it's gonna work. It's like it's valid. On the 5 minutes, it's also a sweep with a week confirmed. So now how do you catch NFP? Simple. you just put your sell stop under a low that you know if price gets there, if NFP starts, price will break the low and keep selling. You don't want to be in this trade before now. You don't want to do anything stupid because NFP could throw a last week before dropping. So you want to make sure it has done whatever you want to do before crashing down before crashing down to actually meet you. So that's where you want to put your entry, and then it's NFP. The actual weekly areas where have been targeting have been all around here. So personally, I don't put my TP on NFPs, right? So just let everything fucking move. So now before NFP, some few minutes, this is like 5 minutes before NFP, price came here. So I did not activate my sell stops. It has to get active during NFP, not before. So what happened when it came close, I shifted it to this place, just under this low, hoping that okay, once price spiked me, that's it. So in NFP, I had this, I kept my TP open, and that was it. Now there's nothing to doubt about this. I call this in the community, and you can see, let's go to the link in the description so I can see how we catch trades together in this place. Okay, so this is it. So I called my first trade on USD card. I'm like, okay, I'm going to put my buy stops there for USD card, and I said EU sell stop price right here 1.10261, and my stop loss. So right here it was not active, it's a sell stop before news. Now this is 1:29 p.m. I posted that, and boom, see right there, see the drop in 1 minute, and then this is the USD card. You see the move to the upside, and this was what I said is gonna be my buy stop. And you see USD card hit TP, and everybody was happy, and there are people that withdrew from this move immediately after they took their profits, right? So this is how to use my strategy. I'm as transparent as possible in this video, nothing to hide. This is exactly how I trade, period. But now, because I'm more experienced, there are some things I would know to trade I would what avoid, because I've been trading for a long time. So what do? You either go and backtest this, study it before you start implementing it, or you message me to get coached on how to trade. You learn everything I know, and I'll put you on a schedule. I'll tell you what to do next. Thereafter, step by step, to see your desired result, pass your funding challenge. So in the description, you get my Telegram link. You just send a DM, tell me your struggle, tell me what you're going through, technically, psychologically. We're going to talk. If it needs you to get coached, then I'll tell you. If it's something that okay, I can tell you a word or two that's going to help you, I'll also tell you. I'll see you in the next video. Next video, I'll be talking about how to catch news, but I'll be making that video after now, like how to catch news and the rest of them. It's really simple. The same that I did here with on Thursday on this thing, just with the sell stops and everything, but I might elaborate a bit on it. Then it's just simple, right? In this video showing right now, I explained how to read structure rightly, how I'm able to like understand my daily range, where price is gonna go next. It's more detailed in this video, how to trade from ERL to IRL. Now go watch it and broaden your understanding about getting the direction right from market structure straight up. You won't get it as simplified as this in any channel, trust me. See you guys in the next video.